Hello traders. Today we want to discuss how to predict a stock market movement like a pro. How to predict a stock market movement like a pro. All right. So we are on a monthly chart of Cognizant technology stocks. The EPIC is CTSH, Charlie Tango Sierra Hotel. This is a Zigzag 100 component. All right, and we want to talk about how one can predict a stock market movement like a pro. All right, so for that demonstration, we will use the stock Cognizant technology stocks. And we want to highlight what one needs to do, what one needs to know, okay, to predict the stock market movement like a pro. All right. So the first thing that we need to know or understand is to find out what has happened before. In order to predict or to forecast the stock market movement like a pro, one must know what has happened before. This is critical for us because if we do not know what has happened before, we cannot forecast the financial market. It's very important to understand the past, and the past will help us to forecast the future. Okay. The next thing that we want to know, if you want to predict the stock market movement like a pro, we want to know also how it has happened. So we want to know what has happened in the past and how it has happened. All right. So talking about how it has happened, we will count Elliott waves. Okay, looking at the price structure, the Elliott wave pattern. Okay, these will that will help us to understand how it has happened. The third thing that we want to know, if you want to forecast the stock market movement like a pro, is to know where is the market now. Okay, where is the market now? So first thing, what has happened before, how it has happened, and where is the stock market now? All right. And the last thing that we want to know that can help us to predict or to forecast the stock market movement like a pro is to apply or to know how to forecast the market, which means to apply the wave forecast strategies. All right. So know what has happened before, know how it has happened, where is the stock market now, and also know how to apply the wave forecast strategies. With those three steps, in fact it's 4 steps, we will be able to forecast or predict the stock market movement like a pro. All right, and we will use the Cognizant technology stock to show traders how we can predict the stock market movement like a pro. So remember what has happened before, how it has happened, where is the market, the stock market now, and apply wave forecast strategies. All right. So looking at the market, we know that in 2003, if you are an Elliott wave trader, you want to understand what has happened before. In 2003, there was a bullish trend that has started in the market. That bullish trend, this is the story about the stock market. In 2003, there was a bullish trend, and in 2000, that bullish trend has lasted up to 2007. All right, 2006, 2007, and from 2007 to 2008, we have the financial crisis. Up to 2009, this is a corrective phase. All right, so this is what has happened before. All right. Then we have, the financial crisis, which was the bearish season. And then from 2009 up to today, we have a bullish trend. So where is the market now? You have to understand that when we are talking about where is the market now, we will check the S&P 500. All right. The S&P 500 is now in the 5th Elliott wave. All right. So what has happened before is this. The stock market was bullish from 2003 to 2007. From 2007 to 2009, we have a correction, a bearish season, okay, due to the financial crisis. From 2009 up to today, we have, okay, another bullish trend. All right. Now, the second step is about how it has happened. So when we are talking about how it has happened, we will count Elliott waves, we will look at the internal wave, we will look at the price structure to know how it has happened. So with the vertical line, we have bullish trend from 2003 to 2007. Okay. 2007 to 2009, we have a bearish move down. This is a correction of this bullish trend. All right. Then we have a new trending phase that has started in 2009 up to today. All right. How it has happened. So we will now count the wave. So this is the first looking at this stock on the monthly charts. All right. This is the first Elliott wave of a bigger cycle. All right. That first Elliott wave of a bigger Elliott wave cycle of a higher degree has lasted 1, 2, 3, 4 for 4 years. Okay, that's the first Elliott wave talking about how it has happened. Then we have a correction. Okay, how it has happened. We can use the Fibonacci retracement, apply to the first wave to see how far the correction, okay, retraced the first wave, the trending phase. So if you check carefully here, that was 78% Fibonacci retracement level. So we have a correction that pushed this stock down to the 78% Fibonacci retracement level of the trending phase. After that, we see a bullish trend that has started. So for that bullish trend that has started in 2009, all right, we can see that, okay, that bullish trend is part of, so here you see here, let me explain myself to you. So this line here, the red line here, from 2009 to 2000, to today, all right, to today, all right, but I will leave it here for now. That trending phase from 2009 to today is part of a bigger cycle. Remember that the cycle itself, the bigger cycle, has started in 2003 for this cognizant stock. And that trending phase from 2003 to 2007 is the first Elliott wave. The correction that is due to the financial crisis of 2007-2008, ending on 2009, beginning of 2009, is the second wave. And then we have a new trending phase that has begun, but the first leg of that trending phase is the third Elliott wave of the bigger cycle that has started in 2003. That's the third Elliott wave. And then we have, okay, right here, the fourth Elliott wave that is an horizontal triangle or the ABCDE, okay, chart pattern, okay. So here it is, it's subdivided into 5. Price went down 1. That's the A, B, C, D, E. This is an horizontal triangle. This is an Elliott wave triangle that we call the A, B, C, D, E. After that, we have the fifth Elliott wave of the bigger cycle that is starting from here and has ended right here. That fifth Elliott wave is also subdivided, okay, into 5 waves. All right, first wave, or the first minor wave of the fifth wave, second minor wave of the fifth wave, and the third minor wave of the fifth wave up to this point, all right, followed by the CDC consolidation this session. That's the fourth minor wave of the fifth wave, and the fifth minor wave of the fifth wave. But from here all the way up here, that's the fifth Elliott wave that I'm going to color now into red. All right. So in order to predict the stock market movement like a pro, The first step is to know what has happened before. The second step is to find out how it has happened. All right? Now, talking about how it has happened, it means that we will start an Elliott wave analysis, counting Elliott wave, identifying the first wave, the second wave, the third wave, the fourth wave, analyzing the price structure. Is it a triangle? Is it an extended wave? Is it a complex wave? And so on. This is about how it has happened. By knowing what has happened and how it has happened, we will now ask the next question, which is, where is the market now? Which is what? Where is the S&P 500? The S&P 500 is now in a fifth Elliott wave. All right? So, if a financial instrument is in a fifth wave, there is a high chance that we may have a correction unless the trend continues one way or another. All right? So the third question is, where is the stock market now? So now that we see that the stock has 1, 2, 3, 4, 5 waves, where is the market now? The market is in a fifth wave. But right now, as you can see, this stock is now displaying, all right, is starting what we call a flat correction. So by looking at what has happened already, which means how the price came down now at this point in time, and looking at the price structure, how it has happened, all right, it is clear to me that there is a high chance that we may see a flat correction. All right? So this exercise will help us to understand how to predict stock market movement like a pro. All right? So what has happened before, how it has happened, where is the market now, and then we will apply, okay, a wave forecast and strategy. Those are the 4 steps that we must follow if we want to predict the stock market like a pro. So with the information that I have so far, answering all the first 3 questions, what has happened before, how it has happened, where is the stock market now, now I am able to forecast what is likely to take place, what is likely to happen to Cognizant stock at this point in time. All right? So there's a high chance that the stock will go back up like this, forming the B part of the flat correction. And then you will pull back a bit. I don't know how far it will go down, a little bit or a little bit more, something like this. All right? This is our expectation. And then it will go up. So as it's going up, we need to watch this level here. If it's going up, the first target, it may stop right here. It may stop here, forming equal high, or it may stop a little bit below it. But what we are sure about is that if that flat correction continues, we are likely to see 1, 2, 3. Where is it going to stop? We will set a target here at this high here. But we know that there are different types of flat correction. This is about applying the wave forecast strategy. There is a pattern developing, and we know that pattern. Because we know that pattern, we can have a bit of idea what is likely to happen in the stock market, talking about Cognizant technology. All right? So this is a normal flat correction if it stops here. But there is another type of flat correction that we call the expanded flat correction. So we want to look at it from different angles. A classic flat correction, a running flat correction, or an expanded flat correction. Those are the 3 scenarios that can happen here. Talking about the expanded flat correction, all right, the expanded flat correction can push the price back above the high of the 5th wave. And if it goes above the high of the 5th wave, there is a high chance that it will stop at 138.2% Fibonacci, all right, Fibonacci extension level of the 5th wave. Here it is, this level here. So our stock market movement prediction, okay, is that for this cognizant stock, it can either stop at this price level around $70, $70.90, or a little bit below it. But one thing is sure is that if it's going to reach that point, it will go up in 3 waves. 1, 2, 3. We are expecting a price structure in the shape of 1, 2, 3, bringing the price somewhere near, okay, the previous high or a little bit below it. If it happens to be an expanded flat correction, in that case, the price may continue to go up to 138.2% Fibonacci extension level of the 5th wave before coming down in 5 waves, 1, 2, 3, 4, 5, down for the expanded flat correction. 1, 2, 3, 4, 5 waves down, forming the C part of the flat correction. Where will the C part of the flat correction end? It will end at either between the 138.2% and the 161.8% Fibonacci extension level of the A part of the zigzag part correction, of the A part of the flat correction. So understand that the flat correction is ABC chart pattern, ABC chart pattern. The A part of the flat correction is subdivided into 3 waves, which we have here, 1, 2, 3. We are expecting the B part of the flat correction to be in place, 1, 2, 3, ending either at this high here, in the zone of $70, or in the case of the expanded flat correction, at $86.08. And after that, after the B part of the flat correction is completed, the price has a high chance to come down in 5 waves. 1, 2, 3, 4, 5. Those waves can overlap each other. This is not a multi-wave. This is a corrective wave. The C part of the flat correction subdivided into 5 minor waves, bringing the price into the zone of 138.2% and 161.8% Fibonacci extension level of the A part of this flat correction. This is the A part of the flat correction, so we apply Fibonacci extension to that, and we will highlight the level of 138.2%, all right, and the 161.8% Fibonacci extension level of the A part of the flat correction. Remember, a flat correction in normal condition is a very shallow correction. So as the C part of the flat correction is developing, if it reaches near the low of the A part of the flat correction, we need to start securing our gain, our profit. All right. Have I made myself clear? So if a flat correction, if the C part of the flat correction is underway, the conservative target is near the low of the A part of the flat correction. All right? But sometimes, in the case of the expanded flat correction, the C part of the flat correction can push it down to the 138.2% and the 161.8% Fibonacci extension level of the A part of the flat correction. This is about the expanded flat correction. But remember, this is very important for you if you want to, okay, trade Elliott wave like a pro. You need to understand that when the C part of the flat correction is underway, the conservative target that one should set should be somewhere near the low of the A part of the flat correction. Somewhere here. That's your conservative target. From here downward, you need to be very, very careful because the flat correction can end somewhere here. But if we have an expanded flat correction, sometimes the price, or in fact very often in the case of the flat correction, in the case of the expanded flat correction, the C part of the flat correction can push it down into the zone of 138.2% and 161.8% Fibonacci extension level of the A part of the flat correction. All right. So now this is my Elliott wave, my stock market movement forecast stock market movement prediction for Cognizant Technology stock, a NASDAQ 100 component. But we need to follow the correct steps, all right? Which means you want to know, all right? So you are like a pilot, all right? You know how the procedure that you must follow to take off and to land, all right? The same thing you want to do if you want to predict the stock market movement like a pro. You want to know the 4 steps that you need to follow. Know what has happened before, know how it has happened, all right? Ask the question, where is the stock market now, i.e., where is the S&P 500 now? And apply, okay, wave forecast strategies using the area wave principle, using the area wave patterns. This is exactly what I have done today. From 2003 to 2007, the stock market was bullish. From 2007 to 2009, to the beginning of 2007 to 2008, there was a bearish correction. That bearish correction is due to the financial crisis, the real estate bubble in the United States, followed by another bullish phase from 2009 up to today. But now this is about, okay, what has happened. Now how it has happened, now we start counting with. The first area wave has been extended here, can you see? For many years, for this bigger cycle, the first area wave has been extended. The second wave pushed it down to the 78% Fibonacci retracement level of the first wave, all right? If we apply, hold on please traders, if we apply Fibonacci extension to the first wave, we want to verify whether we have a normal third area wave. If the third area wave stop at 161.8% Fibonacci, okay, extension level of the first wave, we will declare that we have a normal third area wave. And the 161.8% Fibonacci extension level of the first wave is the line here at $38.28. All right, is that correct? Can you see? That's the line here, $38.28. Is that correct? $28, something like that, okay? $28.28. Call it like that, okay? So that's the line here. So you can see that the third area wave went a little bit above it. Just a little bit above that level. I will call it a normal third area wave because it just went a little bit above it and then quickly come back down. All right? This is about how it has happened. The fourth area wave is an horizontal triangle, ABCDE area wave triangle, followed by an extended complex fifth Elliott wave. All right? So, know what has happened before, all right? The phases of the stock market, trending phase, corrective phase of the stock market, all right? How it has happened, count the area wave, look at the internal wave, analyze each wave individually, understand what is happening. Is it an extended first wave? Is it a normal third area wave? Is it a complex fifth wave? Is it a complex fourth wave? Is it a triangle? Is it a contracting triangle? Is it an expanding triangle? What kind of correction we have in the fourth wave, in the second wave? Is there alternance between the first, alternance between the second and the fourth Elliott wave, all right? And do not violate the Elliott wave principle that stated that the third Elliott wave should not be the shortest, okay, multi-wave. It is not here. It's almost equal to the fifth wave here, all right? Okay? Will you see a little bit shorter? So if you put it on top of the triangle, you may see equality, almost equality, all right? Almost equality, okay? All right? So know what has happened before, know how it has happened. Now ask the next question, where is the stock market now? Why we need to ask that question? Because it's so important to know where is the stock market. This will allow us to stop violating the trading triangle. We are trading first the market, then the sector before the individual financial instrument. We do not want to ignore the economy news, the fundamentals, okay, and the market leader, which can change the dynamics of the technical analysis. Now that we have answered those three specific questions, Okay, what has happened before, how it has happened, where is the stock market now. Now we will use wave forecast tools, all right, like area wave channeling, all right, use the area wave principle, use the area wave patterns, okay, to forecast the next price action. So for this stock, we see 1, 2, 3, 4, 5 waves. We see now that we see this structure here, 1, 2, 3. This is the first indication to me that is a high chance that we may have a flat correction. We may have a classic flat correction which may end somewhere near this high here in the zone of $70, or if it is an expanded flat correction, it may continue to go up into the zone of 138.2% Fibonacci extension level of the fifth wave before coming down in 5 waves. We need to understand that the C part of the flat correction, a conservative target should be set at the low, near the low of the A part of the flat correction, somewhere near the zone of $50. Though the expanded flat correction, the C part of the expanded flat correction, can push it down all the way to 138.2% and 161.8% Fibonacci extension level of the A part of the flat correction. This is the end of this tutorial about how to predict stock market movement like a pro. All right. If you have any question or comment or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. To summarize this video, in order to predict the stock market movement like a pro, we need to know what has happened before, how it has happened, and we want to know where is the stock market now, i.e. the S&P 500. Then the next step is to apply wave forecast strategies. We are the GSTWSYS008 traders talking about how to predict stock market movement like a pro. The financial instrument that we were analyzing is Cognizant Technology Epic CTSH, Charlie Tango Sierra Hotel. Happy trading to you all and speak to you soon.